This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra. Anthropic says that China's Deepseek stole data from its Claude AI. We'll tell you the details on the show this morning. Also on the show, WhatsApp has agreed to follow NCLAT's guidelines on advertiser-related privacy concerns. And finally, IT stocks continue to bleed after Jefferies' downgrade. The AI impact is likely to weigh in heavily, and a band-aid will not really make it. Amrish Malika will be joining us on the show to tell us what your trading strategy should be. All this and more on this edition of Morning Brief at 9. This is Morning Brief at 9 this Tuesday morning. Here are the headlines. Canadian Prime Minister Mark Carney is set to visit India, Australia and Japan to boost trade, diversification and deepen Indo-Pacific partnerships amid rising US tensions. Commerce Minister Piyush Goyal and Canada's Minister of International Trade Maninder Sidhu discuss advancing India-Canada CEPA and boosting business ties ahead of Mark Carney's India visit. Kazakhstan signs fresh uranium supply deal with India to boost nuclear power expansion and strengthen long-term energy security ties. Supreme Court declines interim relief to Meta and WhatsApp as tech giant agrees to comply with privacy and consent rules on advertising-related data. US President Donald Trump prepares to showcase his first-tier achievements in office during Tuesday's State of the Union address as he faces mounting political setbacks ahead of November's pivotal midterm elections. Trump threatens fresh punitive tariffs on countries that, in his words, play games just hours before the new 15% duties take effect after the US Supreme Court blocked Trump's global trade agenda. US and Japan agree to uphold last year's bilateral trade pact even after Supreme Court halted many of Trump's worldwide tariffs. Iran warns it will retaliate forcefully against any American attack, repeating that US military action could spark a broader regional war following Trump's latest strike threat. And a YouTube executive tells landmark US court that the Google-owned platform aims to deliver value, not fuel harmful binge viewing, as the closely watched social media addiction case resumes. Canadian Prime Minister Mark Carney is set to visit India, Australia and Japan over the next 2 weeks in a strategic push to reduce Canada's economic dependence on the United States and expand partnerships across the Indo-Pacific. Now, the trip begins in Mumbai, where Carney will meet Prime Minister Narendra Modi and top business leaders, highlighting fresh push in India-Canada trade ties after years of diplomatic strain. From India, Carney will head to Canberra, where he will address both houses of Australia's Parliament, the first Canadian Prime Minister to do so in 2 decades, and hold talks with Prime Minister Anthony Albanese. Defence cooperation, artificial intelligence and technology investments are expected to dominate the agenda. The final stop would be Tokyo, where discussions with Japanese Prime Minister Takaichi Sanae will focus on clean energy collaboration, critical mineral supply chains and food security. Carney says the tour is part of Canada's broader plan to double non-US exports within the next decade as American tariff threats continue to cast uncertainty over investment flows. Remember, tensions with Washington have escalated after US President Donald Trump warned of steep tariffs on Canadian goods and revived controversial rhetoric about Canada's sovereignty. Against this backdrop, Ottawa is positioning itself as a reliable partner in Asia. However, the visit to India also comes with diplomatic sensitivities. Bilateral relations have been strained since allegations surfaced linking Indian officials to overseas assassination plots, claims New Delhi has rejected. Union Commerce Minister Piyush Goyal held a virtual meeting with Canada's Minister of International Trade, Maninder, Sidhu, to push forward discussions on the proposed India-Canada Comprehensive Economic Partnership Agreement, or CEPA. Now, in a post on X, Goyal said both sides explored ways to strengthen commercial ties through regular delegation-level engagements in the coming months, aiming to deepen economic cooperation and create long-term push in bilateral trade. Now, the talks come just days ahead of Canadian Prime Minister Mark Carney's upcoming visit to India, where he is scheduled to meet Prime Minister Narendra Modi. The visit is expected to focus on expanding cooperation across key sectors, including trade, energy, technology, and artificial intelligence, as well as talent, mobility, culture, and defense. And moving on, resource-rich Kazakhstan, the world's largest uranium producer, has agreed to supply a massive quantity of uranium to India under a new contract aimed at supporting the country's expanding nuclear power program. The announcement was made by state-owned uranium giant Kazatomprom following recent discussions with India's Department of Atomic Energy, marking renewed push in strategic energy cooperation between the two nations. The fresh deal comes after previous supply agreements expired, with negotiations gaining pace in recent months as India looks to secure reliable fuel sources for its reactors. Now, Kazatomprom has a long history of supplying uranium to India, including a 2009 agreement with the Nuclear Power Corporation of India Limited for 2,100 tons and a 2015 pact to deliver 5,000 tons between 2015 and 2019. Kazatomprom, majorly owned by Kazakhstan's sovereign wealth fund, specializes in uranium mining and rare metal processing, exporting all its production globally. Now, the new contract highlights India's push to strengthen energy security and diversify nuclear fuel supply chains. Meanwhile, gold and silver prices surged in the national capital on Monday as investors rushed to safe haven assets amid rising global trade uncertainty. Silver jumped as much as 3% to 2.72 lakh rupees per kg, while gold of 99.9% purity climbed 3,300 rupees to 1.62 lakh rupees per 10 grams, both hitting 3-week highs. Now, analysts say the rally was driven by volatility following the U.S. Supreme Court's ruling against President Donald Trump's tariffs and his subsequent move to raise global tariff rates to 15%, which heightened market nervousness. Internationally, spot silver traded around $86.5 per ounce, while gold hovered near the $5,150 mark.
Gold rose over 1% on Monday, reaching $5,152 per ounce by late morning, the highest price in 3 weeks. The dollar fell after the Supreme Court found on Friday Trump's sweeping tariffs exceeded his authority. The fresh uncertainty in trade policy stirred up demand for the safe haven metal and made greenback-priced commodities like bullion more affordable for overseas buyers. Trump responded over the weekend by lashing out at the court and imposing a blanket 15% levy on imports, the maximum level allowed under the law, and insisting trade deals with nearly 20 countries, most with higher tariffs, should stay. Data on Friday showed underlying US inflation increased more than expected in December, and signs are pointing to a further acceleration in January. This could discourage the Federal Reserve from easing interest rates soon, lessening the appeal of holding non-yielding gold.
Now, global tech giant Meta Platforms' own WhatsApp told the Supreme Court of India that they will comply with directions to extend Competition Commission of India's privacy and consent safeguards to advertising-related data, as the court heard their appeals against a national company law appellate tribunal ruling. The company said they would implement the tribunal's guidelines by March 16th, prompting the bench to dismiss their request for an interim stay while seeking a compliance report. The case arises from a CCI order that imposed a 213 crore rupee penalty over WhatsApp's privacy policy and data sharing practices. While the NCLAT allowed limited data sharing to continue, it expanded safeguards around user consent, including for advertising use. The top court had earlier warned the firms against compromising on citizens' privacy, stressing that digital users must be protected from monopolistic practices and opaque data policies as the main appeal continues. And on to global stories. Now, US President Donald Trump is warning trade partners not to back away from US deals, declaring a much higher tariff on countries that try to walk back from recently negotiated trade agreements. Now, his warning comes after the US Supreme Court struck down his emergency tariffs. Take a look.
U.S. President Donald Trump on Monday warned countries against backing away from recently negotiated trade deals with the U.S. This follows the Supreme Court decision Friday to strike down his emergency tariffs. Trump said he would hit them with much higher duties under different trade laws. On social media, he said, quote, "Any country that wants to play games with the ridiculous Supreme Court decision, especially those that have ripped off the USA for years and even decades, will be met with a much higher tariff and worse than that which they just recently agreed to. Buyer beware." Trump said he also may impose license fees on trading partners as uncertainty over his next tariff moves gripped the global economy and sent stocks lower. A spokesperson for the U.S. Trade Representative's office did not immediately respond to a request for further comment on Trump's plans. In Brussels, the European Parliament decided on Monday to postpone a vote on the European Union's trade deal with the U.S. after Trump imposed a new temporary import duty of 15% on imports from all countries.
They don't know what would be the terms of the deal now.
Nicolas Frederic Poitiers, a research fellow at the Bruegel think tank, says there is a high level of uncertainty in Europe over how this will play out.
It is unclear what will be the rules under this new tariff, so this has to be calculated good by good. It is not unlikely that there will be goods where the tariff rate will be somewhat higher than under the agreement of last year. At the same time, it is not clear if these tariffs will stand for very long anyway. So right now, there's a lot of uncertainty over this.
Trump's new duty is set to take effect early Tuesday morning. At that same moment, the U.S. Customs and Border Protection Agency said it would stop collecting the duties ruled illegal by the Supreme Court's decision.
Staying on trade with the U.S. Finance Minister Nirmala Sitharaman says it is too early to assess the impact of fresh U.S. tariff changes as India's Commerce Ministry reviews the situation and weighs the next steps in trade negotiations with Washington. Now, her remarks come just days after U.S. President Donald Trump imposed a 10% tariff on imports from all countries for 150 days starting today, later raising the rate to 15%.
On the Indian economy, I think it's a bit too soon for me to comment. But on the trade particularly, aside from the Indian economy in general, the Commerce Ministry is reviewing the situation. The delegation will have to take a call on when they're going to go for further negotiations. So it's a bit too early for me to comment.
Meanwhile, the European Union is demanding United States to honor last year's EU-US trade deal following the recent Supreme Court ruling against President Trump's tariffs and his move to impose fresh 15% global levies. The EU says its agreed tariff ceilings must be respected.
A deal is a deal, the European Commission said in a statement on Sunday, demanding that the US stick to the terms of a trade deal reached last year. This came after the US Supreme Court struck down Donald Trump's global tariffs on Friday.
Actually not in a good mood.
And he responded with new 10% tariffs and then increased them to 15% across the board. The Commission, which negotiates trade policy on behalf of 27 EU member states, said Washington must provide full clarity on the steps it intends to take. Last year's EU-US trade deal set a 15% US tariff rate for most EU goods, apart from those covered by other sectoral tariffs such as on steel. It also allowed zero tariffs on some products such as aircraft and spare parts, while the EU agreed to remove import duties on many US goods. But it is not clear whether Trump's new 15% tariffs supersede the deal. If they do, the EU's zero tariff exemptions could disappear. and the comparative advantage the EU had with a 15% tariff would appear to have disappeared, as even countries without a deal face the same rate. As uncertainty looms, gold prices climbed to a 3-week high on Monday, and Wall Street futures and the US dollar slid.
And FedEx is suing the US government over tariffs. That's right, the global logistics and e-commerce giant has filed a lawsuit seeking a refund of emergency tariffs imposed by President Donald Trump. The move follows the Supreme Court ruling that deemed that President Trump overstepped his authority by using the International Emergency Economic Powers Act, a sanctions law, to impose tariffs on imported goods. Now, more than $175 billion in tariff collections could potentially be subject to refunds. And all eyes continue to be on Donald Trump, and this week at Capitol Hill as US President Donald Trump prepares to address the nation on Tuesday in his State of the Union address, which comes, remember, just days after the US Supreme Court struck down his administration's celebrated tariff policy. The speech also lands as Republicans brace for challenging midterm election cycle.
U.S. President Donald Trump is set to give his first formal State of the Union speech of his second term on Tuesday, and it's likely to be a long night of choreographed tension and conflict. Trump's speech comes just days after the U.S. Supreme Court overturned his signature global tariffs. Trump has sharply criticized the 6 justices who voted to strike them down, including 2 he appointed and Chief Justice John Roberts.
Justices who ruled against this the policy, striking it down, are they still invited to your State of the Union next week? And will you speak with them?
They are invited, barely.
Andrew Smith, a political science professor at the University of New Hampshire, says the Supreme Court's fresh decision is likely to heighten the suspense during Trump's State of the Union address.
My sense is, given the Supreme Court decision on tariffs, that he will be coming out swinging against Democrats. I think there'll probably be more attacks in this State of the Union than typically is the case.
Trump's speech also comes amid a sagging approval rating on his handling of the economy, with November's midterm elections in focus. Meanwhile, Democrats, who need to flip just 3 Republican-held seats in the House of Representatives to win a majority, have blamed Trump's tariffs for exacerbating the rising cost of living.
But it's probably more critical for the president to do a good job in the State of the Union address, because in midterm elections, the president's party almost always loses seats. And the House of Representatives is razor thin already. If the Republicans lose 5-10 seats, which is well in range, they could even lose 20 seats this year. That means that President Trump's last 2 years in office are really going to be hamstrung by congressional resistance that he hasn't faced these first 2 years.
In recent years, defining moments of presidential speeches have often been confrontational, as in 2009 when Republican Joe Wilson heckled former President Barack Obama.
The reforms I'm proposing would not apply to those who are here illegal. It's not true.
This year, Democrats may use the stage to protest, as former House Speaker Nancy Pelosi did when she ripped up her copy of Trump's speech in 2020.
I would not be surprised to see kind of on-the-floor demonstrations by Democratic members of Congress. And I think you're going to see a lot of cameras trained on those people to see what the reactions they're going to have for Trump.
After the speech, newly elected Virginia Governor Abigail Spanberger, a Democrat, will deliver the traditional televised response.
And meanwhile, Iran continues dismissing pressure from Washington. The nation's foreign ministry says Tehran will not unilaterally accept U.S. demands ahead of a 3rd round of nuclear talks in Geneva starting Thursday. Now, this comes as President Trump warned of really bad things in case of a no deal.
Any negotiation whose aim is to force one side to unilaterally accept the demands of the other is naturally bound to fail. At least in the case of Iran, such an approach will certainly yield no results. We have no benefit in the continuation of the negotiations. Negotiations are beneficial for us when they lead to a result. Our people are under pressure, and facing difficulties arising from the unjust sanctions that have been imposed against Iran under the pretext of the nuclear issue. Therefore, reason, logic, and morality dictate that we should act as quickly as possible to lift these sanctions. Contradictions and opposing inconsistent positions taken by various American officials constitute a major obstacle in the course of the negotiations. I do not think anyone can turn this into a threat.
All right, with that, let's slip into a very short break. But as expected, IT stocks continue to bleed in the wave of AI-driven disruption in the sector and the recent downgrade by Jefferies. We'll have Amrish Balika join us to tell us, is there a banded approach or is there genuinely a structural problem with IT sector stocks this morning, again, bleeding more than 2% on average? That on the other side of the break. You're watching Morning Brief at 9.
रश्मि, ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ। छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े, नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। पर बेटा, इनका फ्यूचर? बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है। अभी तो इसकी जीत का इरादा पक्का है। करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ अपने लिए, अपनों के लिए। बुझने लगे किसी की
Birla Opus Paints.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
हाय, हेलो, नमस्ते, कुजुजांगपो। इस वक्त मैं हूँ गांगते मॉनेस्ट्री में। इन खूबसूरत वादियों को देखकर मुझे हमारी बॉलीवुड की एक फिल्म याद आ रही है। तब कुछ लोगों ने विराट और अनुष्का को पहचाना।
Back, you're watching News 9. This is Morning Brief at 9. Time now to look at all the action from the stock markets. As always, first let's look at the US. Well, Wall Street retreated on Monday as investors fled risk. US stocks fell sharply amid ongoing concerns about AI-driven disruption and fallout from the Supreme Court's tariff ruling. Investors moved away from high-risk equities as uncertainty gripped the US markets. Take a look.
Wall Street stocks tumbled on Monday, with the Dow dropping more than 1.5%, the S&P 500 shedding 1%, and the Nasdaq falling just over 1%. Ongoing fears of AI-related disruption and the fallout from Friday's U.S. Supreme Court ruling on tariffs, including President Donald Trump's erratic statements on trade policy, sent investors fleeing from high-risk equities. Dean Smith is chief strategist and portfolio manager at Folio Beyond.
What do people do when this kind of thing happens? They sell first, ask questions later. What are they buying? They're back to buying gold. They're back to buying treasury bonds, safe haven. It's risk off for now. 2026 is off to a rocky start, and it doesn't look like it's going to get a whole lot smoother anytime soon.
Stocks on the move Monday included airline and leisure-related shares, which fell amid a powerful winter storm that paralyzed travel in the Northeast. Among other movers, shares of Eli Lilly gained nearly 5% after rival Novo Nordisk's obesity drug CagriSema underperformed Lilly's drug Zepbound in a head-to-head trial. Shares of Domino's Pizza climbed 4% after the fast food chain's fourth-quarter same-store sales beat Wall Street estimates. And shares of PayPal jumped nearly 6% after Bloomberg News reported that the payments firm is attracting takeover interest.
All right, so that were the cues that we got from the US markets. Meanwhile, the Indian stock market opening again to a negative start this morning. In fact, all the major indices, including the Sensex, Nifty, the mid-cap and the small-cap index, all down by about half a percentage point or so. In fact, in the case of the Sensex, a little more than that. In fact, Sensex down almost 0.6% in the first 5 minutes or so of trading. Right now, comfortably below that 83,000 level. Sensex this morning at 82,800. Meanwhile, the Nifty 50 also showing signs of pain at about 25,573 at about 9:20 a.m. The small cap and the mid cap continue to lose ground as well. All this amid the uncertainty caused over US tariffs. Remember, the small cap stocks had boomed after the trade deal between India and US was arrived at. Meanwhile, the volatility in the Indian market is a little lower this morning, but still above that elevated 14-odd level, showing that there is some sort of fear, not really understanding which side the markets could eventually turn. Meanwhile, let's pull up the Nifty 50 heat map. And you'll see it's not surprising that most of the pain again this morning coming from the IT space, and IT stocks continue to bleed. In fact, going as high as almost 3% down in just the first 5 minutes of trade. Remember, this also comes on the back of Jefferies downgrades to IT stocks, placing many of them in the underperform or the hold category as well. As things stand, TCS, Infosys, HCL Tech, as well as Wipro, Tech Mahindra, all the IT stocks in the red this morning. There are other stocks in the news as well, especially coming from Bharti Airtel, which is pledged to invest as much as 20,000 crore rupees in digital lending through its Airtel Money platform. Investors not taking too kindly to that piece of news. The stock is down more than 2% or so in trade. But the focus really continues to be the IT stocks. And let's look at the IT stocks, not just restricted to the Nifty 50, but even beyond the Nifty 50. And you'll see most of the big names continue to bleed above 2% or so in trade this morning. In fact, it's not just the bellwether stocks, even stocks like Persistent IT are down almost 3%. Coforge, which has got a buy rating from Jefferies, is also down about 2.7% or so. Meanwhile, LTIM also down more than 2%. Emphasis, which got an underperform and a hold rating, is down more than 2.5% or so. So overall, the bleed in the IT space continues, and all this coming largely by way of disruptions caused by artificial intelligence. Ambrish Baliga, independent market expert, joins us this morning to help us understand where is this story going, because Jefferies, Mr. Baliga, has clearly said that the problem now seems to be structural. So it doesn't seem that this pain is going to be temporary. Rather, this is something which is going to be long lasting and is likely to take in its wake investors who have bet on India's IT story.
Yeah, because this pain is clearly going to last a few quarters. It's just not a very short-term sort of a pain, because AI surely is a threat for the IT companies. Right. And I think it will disrupt the way they've been working all along. However, I mean, that could be an opportunity to cherry-pick those which have the ability to ride through this disruption. Because in the longer run, I think the IT companies would have to reinvent themselves, become more leaner with productivity multiplying. And employees surely need to reskill themselves to remain relevant. I mean, we have seen disruptions earlier, but with a different name. Although, like for example, Y2K, the cloud computing, SaaS, when it was, when it came. But every time, we have seen a disruption, it has also been an opportunity, because people were, and at the same time, I would say people are only bothered about the IT companies getting affected. But even the other companies, for example, in manufacturing, services, retail, I think will be affected by AI unless they are able to utilize it in an opportunistic manner. Because at the same time, I'll take you back to the 90s. I mean, computerization itself was a threat. I mean, just see the amount of employment it has generated in the last 3 decades. So I think every threat brings with it a new opportunity, and it's up to us as to how we take advantage of that. So the way I see is, finally, in the next few years, we will see a much leaner sort of IT sector, and productivity, I think, will improve substantially. So basically, I think as investors, we need to identify IT companies which are more fleet-footed.
All right.
And like what I've been saying about other sectors, I mean, recently Bajaj Finance Management, said on an investor call that they deployed AI to analyze about 20 million calls, and they generated nearly 1 lakh new offers for which the information clearly was not available previously.
Right.
Like I said, I mean, AI is going to disrupt across various sectors, whether it's manufacturing, services, retail, even the government. I think AI spends have to increase for everyone to remain relevant.
Right, but I mean, we will sort of, seek your input on cherry picking those IT names in just a bit, Mr. Baliga. But, staying with the theme of AI-led disruption specifically for the IT sector. Now, India's IT sector, $300 billion or so in total valuation, is largely been playing and operating for decades now in the cost arbitrage game. Now, this cost arbitrage gets leveled out with artificial intelligence. So what exactly continues to be fundamentally the competitive advantage that the Indian IT sector will have over its peers, let's say anywhere else in the world, be it Vietnam, be it Philippines, be it even developed economies like the US or UK, which can use the same models and get the same code written?
Well, that's true, but you still require people. It's not that, I mean, for example, a specific project, if it requires, say, about 500 people to work today, with AI, that 500 will not become 2. 500 will possibly become 100 or 150.
Okay.
At the same time, I mean, you need people who have the domain knowledge. That's the most important thing in AI. Because, I mean, in simple terms, when you say garbage in and garbage out, so when you're putting in the codes, even for AI, I mean, you need to have the domain knowledge, which fortunately, I think Indians have been gathering that domain knowledge for the last so many decades. Right. I think that's what will come into play.
All right, Mr. Baliga. But specifically, you said that cherry pick stocks. I will ask you for that recommendation. But there's also this strategy that people say the bellwether IT companies are going to bounce back. Buy on dips would be an opportunity. How does one assess, is the dip enough? Is it enough for you to jump in and accumulate some of those, those headliner IT stocks? Because look at the returns, the negative returns that the IT sector has delivered. The Nifty IT is down almost 27.5% since 1st of Jan last year. If you look at this year alone, year to date, it is down about 17.3% already. And just this month, the month of February, again, the IT sector, the Nifty IT is down about 17.5%. This morning, you're looking at these big names like Infosys and HCL Tech already down more than 3%. How do investors ever know whether it has bottomed out and this is really the time to buy? Or do you suggest keep accumulating on every dip and wait for the sector to bounce back?
No, I mean, see, you'll keep seeing some amount of bounce backs because, I mean, any sector, not just IT, on the way down, you have those couple of bounce backs. So traders can utilize those bounce backs. But as investors, like I said, I think we need to watch closely as to which are the ones which are able to reinvent themselves. And I believe it will be much easier for the mid-sized IT companies. I'm not talking of the small ones because, I mean, they may not have, the deep pockets which are required for AI. And the larger ones may possibly be much slower in adapting because of the sort of, the huge employee force they have.
Right.
So I think one should be looking at the mid-sized ones, which could be possibly more fleet-footed in adapting AI.
Right, which is pretty much you're mirroring the views that that Jefferies also came out with yesterday, that go for the mid-sized IT companies which are likely to be more agile. But any picks that you want to give our viewers this morning, sir? Should they look at, let's say, names like Persistent, Emphasis, Coforge? Are these good names to look at, or these are already a little too big in the mid-sized category?
No, I mean, I would say that continue to look at companies as, big or small as the ones which you mentioned, like Persistent, Coforge. I would also add a Tata Elxsi in this, although it's much smaller than these, but Tata Elxsi also should benefit.
Tata Elxsi seems to be one of the names that comes in this morning. But again, that stock also down about 2% or so today, so might be a good opportunity to buy. Meanwhile, I want to get your views on some other stocks which are in the news. And I want to begin first with IDFC First Bank. And after that fallout that we saw yesterday of the stock closing, what, about 16% or so down, the 590 crore rupee fraud linked to 4 employees in some accounts of the Haryana government. What next, sir? How do you see the story really pan out? Is this going to have some sort of a long-term impact on IDFC First Bank and overall the private sector banks if we see money from government accounts actually moving into PSUs, which seems to be a genuine case building right now?
Possibly, because see, I think, like more than the financial impact, I think the financial impact is secondary.
Okay.
I think the question on reputation, because this is the first major issue which has come up as far as IDFC First is concerned after Mr. Vaidyanathan took over in the last 8 years.
Right.
And all this fear, what next? Because if you remember IndusInd, also, we kept hearing new issues coming up every now and then, even after the management confirmation that everything is fine.
Right.
So, at the same time, you'll see the regulatory scrutiny on IDFC First. I think that will slow it down. After this major correction which we saw, I don't see a major fall from here. But at the same time, I think moving up immediately, I think is going to be quite difficult. And this also points, whatever has happened and whatever has happened in the past couple of years as far as the BFSI space is concerned, that this is one risk which is there, because we have seen huge amount of wealth creation, and at the same time we have seen corruption in the system at unprecedented levels.
Right.
So many people are trying the easier way out without really bothering about consequences. So this will continue despite the sort of checks and balances which are there. So BFSI space, I think we need to watch out for these issues which will keep cropping up.
All right, so be watchful of the BFSI space. Meanwhile, another stock in news is Bharti Airtel, which has said it's going to invest as much as 20,000 crore rupees in digital lending by way of its Airtel Money platform. Investors not taking kindly at all to that news. The stock is down about 3% or so. Again, linked to digital lending, high-risk business, and the fact that Bharti Airtel continues to otherwise drop good numbers quarter after quarter. Is that the fear really with investors right now?
Yes, because any corporate which moves away from its core competence and invests huge amounts in outside that is not really taken kindly by the markets initially. But I would say, looking at the sort of cash flows which the main business generates, I would still wait and watch. I wouldn't be too negative, because you can always have a new segment where you're investing, where you could possibly do well going ahead. I think Reliance is a major example out there. They moved out to various sectors and did decently well in each of those sectors.
Right.
So I think you should give that chance to Bharti.
All right. Another stock in news happens to be Ola Electric, which is going to cut down on its store count from 4,000 stores which it had at the end of 2024 to as little as 550 this year. A massive climb down for Ola Electric. Any view on that stock, or do you think this stock is history? It's time for it to delist, and investors should just pocket whatever they can find as remnants of this once glorious IPO?
Absolutely. Post the IPO, the sort of a move which we have seen, and from really those 150, 170 levels to below 30, currently is at about 26. I think it's a major fall from grace. High expectations. High expectations in those days to clear trust deficit right now. End of the day, when you're investing, I think invest in a management where you know that the management, whatever they say, carries weight. Because today, whatever Ola management says, I really don't think you can really believe it, because things are completely different in the next few months. So I would say, as an investor, stay out. As a high-risk trader, yes, possibly.
All right. As an investor, stay out. As a high-risk trader, possibly. Well, a very, very clear signal there. My final recommendation or sort of input from you this morning that I'll request Adani Power, again, stock in news, which has said that it's going to invest as much as 40,000 crore rupees in Jharkhand and Bihar. But again, investors not really very enthused with this new investment proposal. The stock is down almost 0.75 percentage point or so. I thought investors should take kindly to any fresh investments which are likely to add to profitability. Why this negative reaction on Adani Power this morning?
No, because the sort of huge investments they are making, I think we need to start seeing decent amount of returns. I think we should see those returns in black and white before the market really digests the sort of capex they're doing.
Okay, let's leave it at that for this morning. Mr. Amrish Palika, as always, pleasure having you here with us on News 9, and thank you so much for your time. Moving on now, US artificial intelligence company Anthropic has blamed China for a large-scale intellectual property theft The company claims that 3 Chinese firms attempted to extract capabilities from its Claude chatbot. The company also alleges Chinese AI models, including Deepseek, Moonshot AI and Minimax, used distillation techniques to replicate Anthropic's advanced AI performance. The practice grabbed headlines a year ago when the release of a low-cost generative AI model from Deepseek performed at a similar level to ChatGPT and other top American chatbots, pending assumptions of US dominance in the sensitive sector. Meanwhile, the landmark social media addiction trial resumed in US on Monday, with the top YouTube representative insisting that the Google-owned company's aim was to give people value, not hook them on to harmful binge viewing. YouTube Vice President of Engineering Christos Gudrov was questioned about internal goals of the company to increase viewing hours and features like autoplay and recommendations. The YouTube executive pushed back against efforts by plaintiffs to put YouTube on par with social networks such as Facebook or Snapchat, stressing the platform was not a forum for friends to connect or for sharing vanishing messages. The historic trial is examining whether major social media platforms deliberately encouraged addiction among young people. Time for a very short break, but coming up after this break, we'll tell you what some global policy and corporate leaders have to talk about sustainability and climate change as Terry's WSDS kicks off in New Delhi this week.
Love, lies, and a live-in nightmare.
A dating app match shocking the entire nation.
Tripura teen brutalized. Teen's private parts torched.
सैनिटाइजर देके प्राइवेट पार्ट्स दिन में 3 बार जला दिया 3 दिन लगातार.
3 days of brutality inside Gurugram flat. Chilling details of survivor account on News 9.
Police say her live-in partner, also 19 years of age, allegedly locked her inside a paying guest or PG accommodation.
From dating app to deadly violence, News 9 investigates. Justice for Tripura teen. No spin, no silence, just facts. Only on News 9.
The 2026 edition of World Sustainable Development Summit, or WSDS, the flagship event of the Energy and Resources Institute, or TERI, will mark the silver jubilee of the summit this week. The 25th edition of the milestone event will be held in New Delhi from the 25th to the 27th of February at the Taj Palace under the umbrella theme Parivartan, which means transformation. Now, here are some excerpts of messages that some of the global experts on environment and sustainability have sent for this year's WSDS. We leave you with that.
Leadership. The world sorely needs strong leadership now. We have an imperative to act, given the magnitude of the risks, and we have a great opportunity to act, given the new growth and development story that is in our hands if we invest wisely and well. And that opportunity will be taken if the leaders of the world can explain clearly, on the basis of their own understanding, how big is the risk from inaction and how big is the opportunity from action. My new book, The Growth Story of the 21st Century, tries to set out that growth story. We've had a very good recent document, which is on Viksit Bharat and net zero from Niti Aayog. We've had a very good book emerging just now from Amitabh Kant and Siddharth Sinha, also setting out the opportunities for this new growth model. So that leadership is coming, and it's coming from India in a very strong way. And the WSDS is itself an embodiment of that leadership.
We meet at a decisive moment. The first global stocktake reminds us that we are far off track. Emissions must fall by 43% by 2030, yet current commitment will deliver only 2%. Of the 169 SDG targets, only 13% are on track. These are not just statistics, they are a call to transformation. As the 2030 Agenda declares, we are determined to take the bold and transformative steps needed to shift the world onto a sustainable path. Transformation is not incremental adjustment. It is, in the words of the United Nations Sustainability Analysis, a change that alters the fundamental attributes of a system, its incentives, institutions, and value system. Forests sit at the very heart of that transformation. Forests are our natural climate infrastructure. They regulate water, stabilize soils, buffer extreme weathers, and absorb carbon. But they are also economic and social systems. Nature and people are too often treated as externalities in economic decision-making. That must change.
I think looking ahead at the future, what we really need to achieve the SDGs and go beyond, I think, is to really take a much more integrated and comprehensive view rather than a siloed approach to the SDGs. Of course, we need political commitment and financial resources. But much more than that, I think we need to start looking at these things as completely integrated, and we need to start measuring outcomes rather than inputs and being more data-driven in our decisions. To give you an example of SDG 2 and 3, we need to start looking at nutrition and health together and to take a life course approach, including prevention and health promotion. So if we look at nutrition across the life course, and automatically then we start monitoring both the health and nutrition parameters from adolescents to young women, to pregnant women, to young children, and all the way into aging, we will not only improve the efficiencies in the program design, but we will also start identifying the barriers and sometimes the local constraints to achieving health and well-being.
The climate crisis is a health crisis, which means health must guide decisions on climate and development. Policies on climate, health, and development must align with what protects lives and strengthens communities. Strong health systems are central to this work. And yet, the health systems that people rely on to protect them from these threats are themselves affected by climate change and contribute to it. Through the Alliance for Transformative Action on Climate and Health, WHO is supporting more than 100 countries to build climate-resilient and climate-friendly health systems. We're helping them to transform how health systems are planned, financed, and managed in a changing climate.
Industry is a force for good, must act for positive change, and one of the big positive change which we need to bring about is to see how do we protect the entire planet from the climate risk, and how do we protect the vulnerable from the impacts of the climate risk. In this, the industry is already spearheading many of the elements which will make a big difference. The three key ones in them is our ability to plan and deliver on the climate change risk driven mainly by carbon and carbon emissions. How do we become green, renewable, and how do we travel to net zero? I think there are many sectors, some of them hard to abate, but if we work together as one team and we collaborate, we will find solutions beyond the usual. The second element, of course, is to reduce the resource intensity by greater focus on circularity, and that is something which companies will have to do increasingly to ensure that the circularity goals lead to resource intensity which brings back our use of various elements of the earth within the planetary boundaries as we know it.
Climate action and sustainable development cannot exist in silos and therefore cannot be pursued through the separate policy tracks. At my department, the UNDESA, we are working very hard to accelerate the climate and SDG synergies. Our analysis and intergovernmental work show that the policy coherence acts as a force multiplier, delivering significantly greater impact. The Climate and SDG Synergies conferences and reports have supported the countries in advancing integrated approaches. The 7th Synergies Conference will be held in Bangkok in June 2026, ahead of the high-level political forum on sustainable development. It will contribute directly to policy deliberations. Second, we must amplify the diverse voices. Inclusive decision-making is non-negotiable. The perspectives and the realities of the small island developing states, least developed countries, landlocked developing countries, and the other stakeholders must inform the global action. Their voices are essential and critical for shaping and reshaping effective policies on sustainable development, adaptation, resilience, and climate justice.
The theme of this summit, transformations, is exactly what the Global Stocktake and the Sustainable Development Goals Review demand of us. We should no longer treat sustainable development, social inequality, climate action, and nature protection and restoration as separate agendas. We must treat them as one integrated agenda. The past year has been a genuine stress test. It showed us that progress cannot be taken for granted. Leadership today is about courage. It's about turning ambition into action, even when conditions are difficult. We have seen much of what you could call quiet leadership recently, working hard behind the scenes to sharpen strategies. That internal work is vital. But to achieve real transformation and to overcome the headwinds, we need loud leadership. Loud leaders come from across society with the confidence to engage actively and ambitiously in the policy processes that can shape, influence, and determine our future.
In nature, nothing exists alone. Our actions have consequences, and so too does our inaction. The consequences of inaction are no longer abstract projections. They are lived realities, particularly in the global south, where climate volatility is intensifying and developmental pathways are increasingly climate constrained. So when we speak about leadership in this moment, it cannot be limited to vision or carefully drafted declarations alone. Leadership has to be operational. It has to show up in the systems we build, the standards we strengthen, the accountabilities we enforce, and the partnerships that we sustain. Vera was established almost 20 years ago during a period when international systems were not mobilizing climate finance at the scale or speed required. Carbon markets emerged in the space not as a replacement for public action, but as a mechanism to accelerate it. Today, high-integrity carbon markets remain one of the few tools capable of driving meaningful decarbonization while channeling finance directly to communities on the front lines of climate change. At the same time, leadership cannot be defined by governance reform alone. It must be reflected in real outcomes, such as in India, where more than 4,000 farmers are participating in a Vera-certified mahogany plantation project that has planted over 3 million trees through an intercropping model. Farmers who were once dependent on small and vulnerable land holdings are now diversifying their income, earning both agricultural production and carbon credits, with 70% of carbon revenues flowing directly to them. Yields have strengthened, soil health has improved, resilience has increased. This is climate mitigation. This is also climate adaptation, and that is climate leadership in practice.
Delhi is losing the fight against pollution.
This is not a story of just children. This is the story of every elderly person in the National Capital Region.
Delhi's hazardous air quality.
It's more capital of the world.
Delhi pollution has left us sick and exposed, also frankly embarrassed.
Hazardous air quality are disrupting daily life.
Growing the issue of a toxic